Welcome to Conversations. I'm Muqtedar Khan, your host, and today I'm going to talk to you about the impact of Donald Trump's tariff barrage, basically on America's economy. So we have heard a lot. In fact, I have done several shows now on the tariffs and its their impact on the global economy. I did a whole show on the Japanese deal, then the EU deal. In fact, I've done two shows so far on the EU deal, and of course, I've talked about the Vietnamese deal, the Indonesian deal. So Donald Trump has been imposing sanctions all across the board. We all know about all of those tariffs, which sometimes are like sanctions, sometimes are incentives. But as you know, all the critiques of Donald Trump, all those who were criticizing him, have been saying that tariffs are not something that, like if America imposes 15% tariff on EU, that is not being paid by European companies or by Europe. It is basically paid by American consumers. So if the price of something that we are importing from Europe, maybe chocolates from Switzerland, well, Switzerland is not part of EU, I think. So if you from chocolates from Luxembourg or Cadbury's from UK, then the price will be 10% more if it comes from UK, and it will be 15% more. Hi, Nick Sodi, if it comes from Netherlands. So the consumers will find this more expensive unless there's enough profit margins for the importers that they decide to absorb that increase themselves without extending it. So, for example, if you're importing something and your profit margin is 25%, and now with tariffs you decide that you're not going to pass on the price to the consumer, you can absorb it if you have the margin. But I'm not very sure that there is so much margin as to absorb 15% of the tariffs. Maybe you could absorb 5%, extend 10% to the consumers, and hope that they will still buy your product. I was listening to the backlash from Europeans, and it's very clear that even the Germans are very, very worried. They feel that it is going to really hurt European economies, the 15% tariff. All right, so it's going to hurt a lot of exports to the US. How is it going to hurt the US economy? That is the question that I want to address today in this conversation. And after that, if there are any questions or comments from you, I will read your comments and I will answer your questions. But before that, I also want to tell you that if you have not subscribed to the channel, please subscribe to the channel and like this video. And also go to the post section and read the summary of the Zoom conference that we had on Sunday. It was fantastic. And the members of Khanversations who participated in the Zoom conference, they had brilliant comments, brilliant commentaries. They also had great questions. I posted a summary of that in the post section. You can watch that. So coming back to our question today, how is the US economy hurt? So this is what I'm going to share with you today. I'm going to share with you data about 2 quarters from the Biden administration, which is America's third and fourth quarter. So basically July to September and October to December of 2024. And then we will look at the data from January to March and April to June, the first and second quarters in 2025, which more or less fall under Donald Trump because he became president on January 21st. So except for the first 21st days of the January, he's been president for now 5 of the 5 months and 10 days of the first 2 quarters. But keep in mind that the 10% tariffs kicked in from April 9th onwards. So basically, it's only the the second quarter of 2025, which has been directly impacted by the tariffs, and that's where the US has raised about $1 billion in tariffs. But the perceptions, the fears, every time Donald Trump said 145% for China, and then this, so all his proclamations that he was making on his Truth Social and in press conferences were just rocketing the stock market up and down, etc. So I'm going to share all this data with you, and then we will take a look at it. And then at the end of it, let's be the judge of what happened to the US economy in the past 4 quarters. All right, so take a look at this. So let me check and see if you are able to see this. I can see this. Nick, can you see these graphics that I'm showing? This is data for 4 quarters. And let me tell you what the data is about. So the blue column that you see, the first column, is GDP growth. The second column, the red one, is inflation rate. The third column, which is orange, is unemployment. And the fourth column is international trade growth. Okay. So, according to everybody, they are saying that there are going to be two direct consequences of the tariffs. Number one, thanks, Sodi. Number one, that it will increase inflation in the US. Number two, it will decrease trade because people are not going to buy imported stuff because of the high tariff rates. So it will also shrink GDP as well. So let me show you. The first two sets are for the third and fourth quarter, which were under Biden. And the last two, which look quite erratic, are the first and the second quarters of Donald Trump's second term. So the data is very interesting. So far, there's actually nothing to worry about. I think the devastating results, if there are going to be any, are going to come in the third quarter. So let me quickly summarize to you. The blue, this is the blue, the GDP growth rate. Okay, the GDP growth rate. Sorry, it's here. The GDP growth rate for quarter third was 2.8%. And then 2.4% it dropped in the fourth quarter. These were both under Biden. Then the first quarter of Donald Trump was negative quarter, 0.5% negative, about half negative. So huge drop in GDP growth rate. It went into negative. If we had 2 quarters like that, then you would say that America is in recession. There's an explanation about the GDP growth. Two things happen in that quarter, which is kind of uh, understandable. Howard Lutnick, the secretary, was saying repeatedly that it's because that the US had a huge surge of imports. People suddenly started buying early, afraid that the tariffs will go up. So there was a front loading of imports. So people bought in everything that they needed for the whole year. They bought early to get it at lower tariff rates. For example, if you remember, Apple flew in literally millions and millions of iPhone 16 from India, hiring jets and packing them with phones before April 9th. And so they brought all of that on April 2nd to beat the tariff. So in the first quarter, similarly, February, March, a lot of people brought in a lot of stuff. And so if your imports go up, it has a negative impact on your GDP growth, and the government spending was insignificant. That is why apparently it is. The projected growth rate for the coming quarter, so the US government announces three growth GDP growth rates early, and then at the end then revised one. So the early growth rate expectation is 24%. So it's a pretty jump. So this quarter, Donald Trump's second quarter, the GDP growth is going to be 24%. But if you look at the other indicators, unemployment 4.1, 4.2, 4.0, and 4.1. So unemployment is just staying steady. That is the stunning part of it, that there is no shift, no decrease or increase in unemployment. And that should be good news, because if there is unemployment and inflation, then people are suffering from double jeopardy. And then you have inflation. Inflation in the first 2 quarters under Biden was going up, is 2.4% and 2.6%. Then in the first quarter of Donald Trump, it came down to 2.4%, and now it is expected to go to 2.7%. We will see. Right now, it is around 2.7%. That is the growth. The inflation has increased 2.7. So in the last 4 quarters, you could say that the current quarter is the one with the highest inflation. But 2.7 is not really bad. It's not freaking out the Feds. That's why they are not reducing the interest rates. They have kept it high. Donald Trump is freaking out because he has seen 2.4 to 2.7. He's afraid that it might reach 3.0. Then people will begin to feel at the grocery store, so bringing the prices of eggs down, etc. So there was a lot of chatter on that. And then the final indicator that I wanted to use was international trade. So international trade went down in every quarter for Joe Biden. See, minus 0.8%, minus 0.6%. So if you look at it in this sheet, you can see it is the green one is negative, negative. But international trade has increased under Donald Trump with the extreme increase in imports. So there is a positive growth in trade, which kind of belies the logic that tariffs are going to reduce trade. So far, for 2 quarters, Donald Trump's talk about tariffs and actually 10% tariffs since February 2nd, February 9, have not increased, have not decreased international trade for the US. On the contrary, it has actually increased. Okay, and so now there's a bit more data that I want to show you, which is interesting. So this is the U.S. international trade analysis. So if you can see, the green is the exports and the red is imports. And you can say while exports have increased slightly across the 4 quarters, the imports have just increased. Gone up. And I'm comparing not the last 4 quarters. This is Q1 of 2024, and this is Q1 of 2025, and this is Q2 of 2024, and this is Q2 of 2025. In third and fourth quarter last year, the U.S. Trade went down, but otherwise in these two comparable quarters, you can see that both exports as well as imports are high, which means that there has been more trade in the 2 quarters under Donald Trump in 2025, in the first and second quarter, than under Biden in the first and second quarter. How has this impacted the stock market? So I took this screenshot of this is the NASDAQ, the Dow Jones Index, and I took this about an hour ago, so after the market shut down. So in the last 1 year, you can see it has gone from 5,500. Sorry, this is S&P index, S&P 500. So this is a cumulative index of 500 stocks. It's gone up from 5,500 to 6,500. So in the last 1 year, it has gone up. There was this period in April where Donald Trump was really toggling on tariffs and the tariff war that we were having with China, and the aggressive behavior with Canada as well as with Mexico. All of that really destabilized the market a lot in February, which was very volatile. But then from May onwards, it's just steadily rising to such an extent that the market, the S&P index, is at a phenomenal high. In fact, it has gone from 5,500 to 6,000. There's a 16.95, 17% increase in the last 1 year. And if you go back to the time when Donald Trump came, it would be somewhere around 5,800. So even then, it is pretty high, 6 to 7% or 8% increase since Donald Trump became president. If you look at the Dow Jones Index, it's the same thing. It was 40,000 something last year. It is now 44,000. The growth in the Dow Jones Index is 10.6% in the past 1 year. And you can see the same volatility in April. The market was really very tense in April. And so that is something for us to recognize and understand that this is what is happening. So right now, I can tell you that there has been no massive negative impact on the U.S. Trade as a result of all these tariff discussions and all the things that have been going on. Unemployment has remained steady at 4%, 4.1%. Inflation has been 2.4 to 2.7%. It has gone up since last quarter by zero point 0.3, 0.3%, so to 2.4 to 2.7%. So there is a slight increase in inflation. And then the growth rate of the GDP has returned. It is back to 2.8. That is something that any country in Europe would die for. Japan would love. Germany, I think the leaders of all these countries will give their left hand or even the right hand to get these numbers. 2.4% growth rate in the GDP. And for the United States, with a baseline of $30 trillion, having such a, we are looking at $600 to $700 billion worth of growth over the whole, not even 6 to 7, around 800 to 900 billion dollars, or close to $1 trillion in the whole year. If we continue to grow at 2.5, 2.7, it'll be like, what's happened to my math? 6 and 1.5, $750 billion worth of growth. And with all the investments that are going to come in now from Europe and Japan, it's not going to be a bad deal for the US economy. Let us see. The key thing is what happens in the third quarter. Does inflation spike? Will it go above 3.5% or 4%? Remember, at one point under Biden, it had gone above 3%. So I think if inflation goes up above 3%, 3.5%, and there is some unemployment generated as a result of that, and if unemployment goes close to 5%, then Donald Trump is going to have some problems in November next year during the midterms. But otherwise, things look really good right now, especially with the stock market and with the new bill that he has passed, big beautiful bill that they have passed. Rich people are very, very happy about it. There is one issue which is very, very important and critical, which is cuts in Medicare. So it's quite possible that actually people might start dying because of lack of health care. But we will see as to when it will kick in. And already some Republicans are panicking about the decline of health facilities in rural parts of America because of the cuts in Medicare. And they are trying to come up with a supplemental bill of about $50 billion. The senator from Indiana is trying to get a $50 billion supplementary bill passed so that they can have some money for medical health care in rural America. All of that are going to come to a head sometime in the second quarter of next year. So basically, Donald Trump has 1 year in which he can play around and try to experiment with his economic ideas. But he better shape up, because if by second quarter next year, which means he has the third and fourth quarter of this year and first quarter of next year. So in these 3 quarters, if the US economy holds steady, unemployment stays around 4% or goes down, inflation does not go further up, then he will probably retain both the House and the Senate come November, because the approval ratings apparently of the Democrats is down tremendously. 63% of Americans in a recent poll conducted by Wall Street Journal said that they have absolutely no confidence in the Democrats. At the moment, Democrats have no leadership worthy of talking about, and Democrats have absolutely no ideas at all. Absolutely no ideas. They are just panicking. They are just panicking with the rise of people like Zohran Mamdani in New York. So anyway, that's my update on the U.S. economy, and so this is my analysis at the moment. That from the numbers that I see, macroeconomic numbers, clearly there is not a significant damage to the U.S. economy because of tariffs. There is no decrease in trade at the moment. In fact, there is a spike because of the front loading of imports. And so that is where we are. So I will be happy to take any questions or comments if anybody has. As of now, I don't see any. So Nick Sodhi, thank you for coming. And you missed a very good and interesting meeting here. Do read the comments, the summary of the meeting that I posted. Hope to see you in the next month's meeting. So if there are no more comments, I will take my leave and reheat my coffee. Take care. Bye.